So what we're going to do today, we're going to run over one pair. We're going to look at the structure of the market. We're going to identify what we're capable of identifying, and then we're going to back test it using the 1 hour, 30-minute time frame. We're not going to do no replays, and we're not going to do no forwards, no backwards, no covering candles. What you have to do when you do this process is be absolutely honest with yourself. If you fabricate any stories to match what you want it to match, then the only thing you guys are doing is jeopardizing your own growth. Now, it takes time not to do it, but the only person you're going to cheat is yourself. So you have to be brutally honest. So what you guys are going to see today is me being brutally honest with myself each and every time that I do this. It does take time, but if you want to grow as a trader, I personally believe that this is the most powerful way to grow. Simply because you can see the results, but at the same time, you're battling with trying to make it fit and work for you, but at the same time also being honest so that you know whether you really would enter the market, and also ingraining patterns that you're about to see in your head. And that's what's important. So watch how I do it, questions at the end, and we're going to run this for 20 minutes straight. No laughing, no joking, no messages, no annotations, okay? So we're going to start. So if I'm at home and I'm sitting at my computer or I'm on my phone, the first thing I'll do is just run over to one chart. I don't care what it is. To me, if it's Euro USD, gold, UJ, it means nothing. I am just simply looking at the market structure. What I would then do is just go to my 4 hour time frame, and then I'm just going to scroll back like this. Now, I'm only going to stop when I recognize something. And the thing that I recognize is everything that I've taught in the course and everything that I trade by and stick by. So first and foremost, I'm going to analyze structure. First, this is simple to me. Structure was down. Structure was broken. Now, the first thing that I pick up on this here is price action broke the structure after a very long period of time that it failed to do so. This is indicating bullish pressure on the market. Now, I do not buy the market, so I will not be looking for trades. However, just to ingrain patterns in my head, I will then do this. Now, this is an indication to me that this was a structure low. This now becomes the structure lower, higher low. This is a pattern that is taught in the course, and this is called, or whatever you want to call it, a missed double bottom. This is now indicating to me that the bullish pressure is evident in the market. So I say to myself, would I have bought this market? Well, Rox, the truth is you don't buy the market, so you never would have taken this trade. However, to recognize this pattern, you would have seen here that there was 2 4 hour candle closes with rejection wicks. And then you're looking for price action to come back to this level to buy the market. Because I don't buy the market, I'm not going to analyze this anymore. However, I then move on to the thought process of price attempted to push up and failed to break the previous structure high. This does not indicate a sell bias market to me. This just indicates price has not managed to make a structure high. For that reason, I have 2 options. I'm now waiting for price to push down to make a lower low of the previous structure to indicate sell pressure. If I do not see that break of this low to make a lower low, I'm still bull biased on this market. For that reason, once I start to see price closing at these levels here, and I have now 1 4 hour candle close with rejection at a major level in the market where it previously made a higher low, I'll join the dots. And then I look here, 1, 2, 3. This is 12 hours worth of information here to indicate prices failed to break below, creating a double bottom of the higher low. Now, one point I want to illustrate to everybody here now, and something that I personally would take away from this as a lesson. Most people are looking for 4 hour candle closes with rejection and then looking to immediately get into the market. Yes, it's taught in that kind of fashion in the course, but what you guys need to be focusing on and thinking about logically is the first 4 hour candle close with rejection is indicating price is failing to continue pushing down or up. That is now becoming evidence. You then need confirmation. The second lesson you're going to draw from this is there is no way in hell that we as market structure traders need to be looking or be the first person to enter a trade, buy or sell. We can actually wait patiently for 4 hours, 8 hours, 12 hours, or even 16 hours before we enter the trade. FOMO should not be an issue with the style of trading we do. Now, moving on very swiftly. I don't buy, so I'm not going to analyze the markets no more based on buy bias. But again, this is how I'll continue. The market continues to push up, makes a higher high, makes a higher low. Now, of course, this is not a higher low that I would take simply because I want to see clean price action. But after the evidence of a higher high indicating continued bullish pressure, I'm now looking for price to make a higher low, or as we have done previously, a double bottom. I'll get into the logistics of this in a minute. And then we continue. Now I'm a sell trader, so now we look. This is the fun part. So price broke this structure indicating bearish sentiment in the market, not yet sell bias. We have a push to the upside, and now this is where I start to analyze. Price made what I would visualize in a live market as a potential lower high. So now this is where the fun bit starts. So what I say to myself now at this moment in time, let's clear these. Actually, let's do this very simply. Now, notice that I'm disregarding all of this. I see it, guys. I see it. But I have to be realistic. If I'm looking at the markets and I'm seeing the markets like this, then this means it's a lower high. You must be disciplined and you must be systematic. So here is a lower high. Now what I need to do is go down to my hourly time frame. Okay, so now I'm disregarding this information. So this is how I look at the market. So we had this exhaustion back to what I visualize to be a lower high formation in the market. Here is a bullish candle, and we now have signs of rejection. So at this moment in time, I'm looking at this area of the market. The honest answer to this question, would I have sold the market here? No. Would I have sold the market here? No. Would I have sold the market here? No. Would I have sold the market here? No, no. Right. Now, after we start to have the evidence that price is failing to break above, this candle here starts to whet my appetite. We have a bullish candle into structure with a rejection. So we see that the bulls tried to attempt to push up and failed based on previous structure. So now we have evidence, and now we start to have potential confirmation. The question here is, when I'm looking at this structure, is would I have entered the market? Well, I know I'm going to lose, okay? Even if I go for a 3-to-1, but at the same time, I'm not looking at this. So what I start to do now is investigate. The investigation starts. This candle here is indicating bullish pressure into the market, failing to break above. Now, based on what I can recognize, am I selling this? No. Would I sell this market structure if price came back into this area and then got triggered in with a sell stop? Well, more than likely, because what now is starting to build up for me as a story based on this trade is that we are seeing bullish sentiment into this area of the market, but failing to break above. So what I would need to see now is price action to come back into this area in the market to about 50% of my stop loss range, and then only trigger me in with a sell stop. So again, being brutally honest, this is good enough for me. Now that price has come into this area, I think I'm ready to sell the market. So just so you guys can see this, this is how I'm looking at the market now. I disregarded everything I saw to the right. This is how I'm seeing the market. So we'll do a stop loss placement. Now we have structure here. This is Euro USD. The range is not too bad on this pair. Would I have worked with a 6 pip stop loss? Probably not. Let's investigate. This is the major area in the market that I'm looking at. Price failed to break above. Stop loss is nicely above the structure. I think this is fine. And then I probably work with the 1 to 3 as always. Now, this is what I'm seeing in live. I'm seeing an attempt to break to the upside, and now all I want price to do is push back into my stop loss range and trigger me in with a sell stop. That's it. How I plan this trade? Well, I'm looking for price to come down to about 5 pips, and once it's reached about 5 pips on this trade, then I'm going to lock this trade in at break even. That's it. Nothing else to be done. If price pushes down, triggers me into the trade, then I get entered. Fine. I'm now entered into the trade. All emotions removed, trust in the process. I either get break even, take profit, or I get stopped out in this trade. Okay? Let's see what happens. Right. So we have another attempt to push to the upside. The bulls failed and the bears have taken over at this moment in time. Again, now we're starting to move sideways. Now, the emotions that will arise at this moment in time is, I want to close a trade. I don't know if I'm going to win. Should I move my stop loss down? Should I open up my stop loss? All of that needs to be removed. There's nothing you can do right now at this moment in time. It's just a matter of waiting to see what happens. Look, so now, this is the situation we're in. We have a break-even trade. So now we move to break-even. This trade has been built off of the 4-hour time frame based on behavior on the 1-hour time frame and being brutally honest with myself. I'm now break even. So what I would usually do is log this trade in a spreadsheet, or if you are willing to do this every single day, then you know what? Eventually you would ingrain it into your subconscious, okay? And you'll be able to do this very effectively. But I'm going to continue. So now we are break even. Now we are stopped out, okay? That's it. Break even trade over. We move on. We log this. We take a screenshot of this trade. We take a screenshot of this trade. We go over to Paint. We cut this trade out along with the 4-hour, and you go over to Word or whatever you're using and you paste it and you write your little notes. That is it. Okay? Now we continue. Back to the 4-hour. Trade 1. Continue. Let's roll back here. Fine. This works for me. So now I'm looking at the structure. Price action was pushing up. Let's remove everything. Price action was pushing up. Now remember, that took me 5 minutes, being brutally honest with myself. Now I may just leave my charts, move on, and then I might be sitting outside having a beer or just finish dinner while my missus doing the dishes. And I go back to my charts. Structure's up because I recognize this pattern very well. Now I see the breaker structure indicating bearish sentiment in the market. I see a pullback and now a potential lower high in the market. Now I recognize this is happening, guys, but I don't care. I'm studying this area in the market. Back to the hourly time frame. Right. So break a structure, pull back to structure. Now, being brutally honest with myself, I do see this big bullish candle pushing into structure, indicating bullish pressure. I see the bearish candle immediately after that, but I know that I do not personally take trades like this. I need to see wicks, wicks, wicks. Now, notice, even though price action pushed down, notice, even if I enter this trade, I probably will hit my 1 to 3. And notice, even if I decide to say I'm going to take a sell limit, sell stop, it probably would win. But this is not a trade I take. The next thing that you guys probably may do is start to say, well, yeah, look, it's lining up now, so now we have a double top cheese man. No, keep it real. The truth is, to me, there is no trade here. We do have the breaker structure. We do have the pullback indicating on the 4-hour time frame that this is potentially a lower high because we have the wick. But once we go down to the hourly time frame, we do not see that behavior. Or for me, I don't see that behavior. I see strong bullish candles and then immediately after a bearish candle. I don't take engulfings, so that's no trade. What I would then do is leave this alone. Let's not fabricate the story and start thinking, well, we know we're going to sell here. No, we don't. What we're going to do is go back to our 4-hour time frame. I'm going to analyze this from this point on. So now we know the market is potentially bearish sentiment because we've had the break of structure. We've had what potentially looked like a lower high, which is completely fine. We now continue the theme. We had another push to the downside, indicating price failed to break the structure. Does this mean we're buying? No. The only time we're buying this structure is when price breaks and violates this structure high. So we're still sell bias on this market. What we're now looking for in this market is for price to potentially come back for a double top and then sell. So let's study this now. 1 hour time frame. So let's study this. So this was the previous, what we thought to be a lower high was the wick on the 4-hour time frame. The price finally pushed down and came back to now make a double top of this structure. We're not taking into account this information because we know on the 4-hour we're still sell bias. Let's look at the structure. We have strong bullish pressure into a major area in the market. Here we have evidence. Here now we're starting to build confirmation. I'm only accounting for this one wick. So this now is starting to indicate to me that price is failing to break above, potentially starting to build a double top of what we thought to be the previous lower high. This is based on 4-hour break, potential lower high, no sells. Price came back to the previous lower high for a double top. Now, this candle is not sell pressure to me. This push to the upside is now very exciting. The reason why this is very exciting is because if I now decide to set my sell stop below this structure with a stop loss above this structure, so again, always being realistic and not fabricating, what I'm looking at is, let's set a stop loss. So I will never work with 8, 6. I will always go to 9 and round it off. Stop loss looks completely fine. Do I care about my take profit? Absolutely not. The only reason why I'd worry about my take profit is if this major level here was up here. The only question I have to then ask myself is, can I get to break even at the same size as my stop loss, 9 pips? But we're not having to worry about this right now. Fine. Trade is set. Now, this is decision I make at this moment in time in the market. We see the bullish sentiment in the market. We see the rejection at a major level in the market. We see the break of structure indicating bearish pressure. Price failing to break up to make a higher high. Price pulled away for a very long period of time, came back to structure with strong bullish pressure. We're failing. 2 things can happen in a scenario like this. Price could push up with continued bullish pressure. Price could push down and react to this level and continue with the downward or potentially reverse to downward momentum. For this exact reason, I feel content enough to take this trade. How would I do it? At this level in the market, I'm setting a sell stop. You guys will be asking, how do you know to set it here? I don't know. If you want to set it here with stop loss above structure, fine. If you want to set it up here with stop loss here, it's fine. If you want to set it down here with stop loss above here, it's fine. Just go with what you are comfortable with. Everybody is different in handling different situations. Me personally, the reason why I feel content about this trade is because as long as prices come to about 50% of my stop loss, I feel confident enough that if price pushes up, I can cancel my sell stop. If price pushes down, I'm trusting my analysis, and that is it. There's no more to go by. Okay? So let's see how this trade plays out. Now, for those that are saying, well, you know the results, Rots, because you've seen it, well, bollocks to that. I don't care if I know it. I'm being honest with myself. Okay? This is how I would trade. And I said, the only person that you're holding back is yourself if you do not be honest and you start to fabricate stuff. For this reason, I'm being truthful to myself, because even if I'm lying to you as your mentor, it's not going to help me in my trading. So you either trust me with this process or you don't. This is how I study. Now we'll see what happens. Okay. Price pushed up, failed, and now continue to push down. Because price never pushed up and violated my stop loss area, I would have held on to this stop loss. This sell stop. Okay. Now, the next thing I need to do, because now I'm triggered into this trade, is make sure that I get to break even at 9 pips. Okay. Here. Fine. And let's see what happens. That's completely fine. Cool. Now I've turned this into a break-even trade. What I'm doing now in this situation is, again, I'm print screening this. I'm going over to my paint and pasting it. I'm then simply just going to go here, cut this out, paste it in a Word document. In my Word document, what I'm now saying to myself is, price made a lower high after the break of structure, failed to give me evidence. This is me being disciplined. I now didn't care what happened to price action because I just had an alert here. Once price came back, there was enough evidence to indicate that the bulls tried to take over this market. There was a big, strong bullish candle to structure, so I set a sell stop. Price could either go up, which means I don't get triggered in, or go down, which I'll get triggered in. Simple. Double top formation. If you want to look at this properly, this is a Daddy Cheeseman. Okay? Again, jokes aside, these are very, very powerful, and now I'm expecting the market to go down. Let's continue. That's what I'll do, and then I'll mark my results. Oh, nearly break even. Break even. Now what you do is you go and put that down as a break-even trade, and that's it. Now, let me show you something, okay? Price action actually continued to pump down. But notice on this occasion, I'm being brutally honest with myself. I got stopped out. The question is now when this, got stopped out break even. The question is now in a situation like this, or what would happen in the real markets, is traders will start to say to themselves, well, I got stopped out break even. Did I go break even too early? Well, listen, if you had taken enough time to plan your trade and execute it systematically, this is something you should expect to happen. Okay? And then you move on. So at the moment, we're 2 break evens. Most people might be at 2 losses. Some people might be at 2 wins. Doesn't matter. This is called trust in the process. And this is how you guys can continue to backtest. Let's continue. And notice I'm only using the 4-hour, 1-hour time frame. Let's use different structure now that I want to test. Fine. We have the breaker structure. We have the lower high. Don't care if I could sell that. We have the double top. Don't care if I sell that. Triple. Don't care if I can sell that. Now we see price pushing down, breaking, violating the structure, coming back to make now a lower high. After this, structure has changed to break, high, lower low, lower high. Let's see if we would have got a sell here at this lower high formation. Let's backtest. And this is so fun, man. I do this all the time. Every day I do this. Right, so guys and ladies, you've already got this in your head. Lower high. Could we sell? Probably. Could we sell? Nope. Could we sell? Most definitely. Do we care? No, because now we're looking at the lower high formation. Price broke the structure, indicating bullish pressure in the market. This is something to be honest about, because I know there's traders in here right now that sell these. Would you have sold this? Well, it's up to you. If you like taking these trades, it's fine. But I personally like to see the market come back. And for those that are not that experienced, let's allow for the market to come back. So now I'm looking at the structure in very fine detail. We have the breaker structure indicating bearish pressure, a nice pullback. anytime I see green, 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 I'm almost certain that we're going to have either a continuation or an exhaustion in the market, as well as seeing red, 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 red. Okay? So now I'm looking at this. I say to myself, strong bullish pressure into the market. We have the rejection. This is fine. This is not enough. I now see price attempting to break this structure and failing. Now it's starting to build up for me. What I need is a stop loss above this market structure to enter this trade. Could I have entered this trade here? Well, would I have? So now let me study this. We had the break, it failed to break, and now I need price to push back into my stop loss range, which it did. So this is so funny. What I would have probably done in a situation like this is I would have had my stop loss above the market structure. Okay, this is Euro USD, so we'll work with a 10 pip stop loss on this occasion because that's what it looks like we need. No, it's going to need a bigger stop loss for this, okay? But notice I'm not going to fabricate the story. I'm going to be brutally honest. Now, this is the candle I'm working with at the moment, just this candle. This is very good evidence. If I was to enter this trade, maybe I needed the stop loss to come below this level for a sell stop and for price to come up and trigger me into the trade with a stop loss above market structure. I don't feel content that I would have been honest about this if this was the live market. So for that reason, even though I know this trade wins, this candle here, for some reason, is just not doing it for me. The reason why this candle is not doing it for me is because I just don't feel satisfied with this candle. So I'm going to leave it, okay? I would have wanted to see price come up into here a little bit and then go down, okay? And we don't have that for me personally. So I'm going to let this one go. Let's continue to analyze this. So now we have this structure. So price then attempted to push down, left a wick behind indicating bullish pressure, but still sell bias. We have an indecision of nobody taking over the markets, bearish pressure indicating sellers are in control, and then the bulls tried to come in and take over this market and failed. Unfortunately, at this moment in time, I don't think I would have got an entry. Unless I scale down to my 30-minute, which I'm not going to do, if I'm just looking at this based on 4 hour, 1 hour, I would not have got an entry. The only entry I can see, if I trusted my analysis enough, was to see price come back into this level here with this candle, push up, and then enter with a sell stop. For me on this occasion, price did not push into this level enough for me to warrant a trade. So for that reason, this is a no trade for me, which is a shame. But the shame's happening live as well. So let's keep it real. Let's continue with this. I just want to analyze now. I know I missed this. So let's see if I would have got a trade in and around this area here, continuing with this sell buy structure. So it would have been in and around this area here, which is the next lower high. Now, at the same time, notice that all the structures that I'm picking are very simple and very clean. And this is what I need you lot to start to identify in live markets. Clean, concise structure. So let's continue with the analysis. Let's not get lost here. About 4 hour. Okay. And we're back here at 27th of November. 27th, 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 27th. Oh, jeez, this is it. Right, here we are. '27th. Okay, I can see for a fact after this structure, we have this push to the downside, the rejection, and now we have a push into structure, a bearish rejection of this level, and then price comes back in. On the hourly time frame, I do not have an entry. Okay, let me illustrate this to you though. After we have this evidence of continued pressure in the market and the break and final break of this previous structure, we now have evidence here of price attempting to push up. What I want you guys to recognize here on this occasion, let me just get there a second. November. Here on this occasion is I'm now seeing the final break close below the structure. Once this rejection wick pushes up like this is how I can start to view the market as a potential retest of this structure. But this 1 hour candle alone is not enough. So now I need to be honest. This is now starting to build up to become a very good trade as a break and retest of this structure, because we never had evidence from this lower high. We now broke below this structure, indicating bearish sentiment, and now we have a pullback, leaving wicks behind. So now I need to build enough evidence. We're starting to build it. What I can do in a situation like this is say to myself, if I enter this trade, I can have my stop loss above the market structure here. If I want to enter this trade, then I think with such a long wick, I would go for a 10 pip stop loss. I'll set my trade like this and say now, if price comes to in and around this area, I have a very safe stop loss. Price comes in, then I can set a sell stop. And if I get triggered, then all I'm expecting is this continued bearish pressure in the market to push this down, okay? So this is how I'll backtest this now. And let's see what happens. No entry. Now, we have strong bullish pressure into previous structure where price showed signs of rejection. Two things can happen in a situation like this. Price can push up with continued bullish pressure, or price can push down based on lower high, break close below, lower high formation. So now what I'll do in this instance is, again, print screen, paint, paste, and then copy into Word with all these thoughts that have gone into my head. So now I've decided in the live markets, I'm content with this. I now will set a sell stop here. Let's see what happens. God knows what happens there. I do not know what happened, if we hit stop loss first or whether we hit stop loss after. Whatever. We have to go back to see. No, I can study this on the 30-minute. Hold on. I can study this. So no, so we got triggered into this trade, okay? I wish this didn't happen, because then now everyone's going to ask me about this. But you guys should understand price action. We set our sell stop on this candle, and look here. We never got triggered, but we got triggered here. The only difficult thing about this now is that we would have moved our stop loss, okay? So let's just be brutally honest with ourselves. If we moved our stop loss above market structure, we're not going to do it on this occasion. I'll do it on another occasion. But anyway, let's say we got triggered into this trade after price pushed up, okay? So now we have, in this instance, a very not so great stop loss because we won it above structure. But let's see what happens, okay? Okay, price pushes down and we go break even, and then we move on. Forget about the results, guys, okay? Forget about the results. Please just focus on the thought process and the evidence that I'm looking for on this market. I'll do this one more time, and then I'll take some questions. Again, I will feel like taking a continuation trade. So for the structure, we have a double top here, and we have a lower high here. So I'm going to study the lower high. Let's go to the hourly time frame. Okay. So lower high formation here, strong bullish candle, engulfing bearish candle to the downside, no trade. Bearish pressure with bullish pressure present in the market, leaving the wick, definitely no trade. Bearish candle to the downside, definitely no trade, because right now then this market is just moving sideways. I now notice that price pushes away from this structure and comes back to an area in the market where price failed to break above. So now I'm studying this market. We will find it. We will find it. Okay. So my thought process is, this candle here in itself is beautiful for me. Now I say to myself, hold on, have we done this one already? This looks very familiar. Well, I don't care. Anyway, so now we see this break to the upside, failed, push back down. We see an indecision candle here. I'm all over this like a rash, okay? All over it. Because I understand that the sentiment of this market is high, lower high, but no trade. Double top of this structure, and now you can see what we're starting to form. You think this is a joke, right? Everybody thinks this is a damn joke. You lot disrespecting my shit, man. This is the cheese man. This guy is real out here. Okay, now I feel confident to take this trade. I'm now going to put my entry here, stop loss above this structure. I will be brutally honest when analyzing this, so just bear with me one moment. We're not going to finish this on a high. We're going to finish this being honest. Right, no trade, definitely no trade. Too much bullish pressure, no trade. Bearish pressure is good, but we're not taking engulfing candles. Price now breaks the structure, pushes down, pushes back up, comes back after a period of time. Strong attempt to break to the upside, fell. Strong attempt to break to the upside and fell. Now I feel confident. All I want to see now is price push down with momentum or push up with momentum to trigger me into this trade. Stop loss above market structure. This is not a safe stop loss, so I think I have to go with a 17 pip stop loss on this. Looking at the wick, is this enough? Probably not. I have to go for 18 pip stop loss because visually this is what looks safe to me. Now we're just above this wick, which is fair enough, and we're going for a 1-to-3 risk reward ratio. Two things will happen now. Continue bullish pressure to the upside, not triggered into the trade or triggered into the trade. How I plan this trade is once price pushes down 18 pips or whatever it is, 18, 19 pips, then I'll go break even. Okay. I feel happy, I feel content, I have the evidence, I have the 488 structure, I have the lower high with no evidence, but now evidence and now confirmation. Let's see what happens. Okay, what is this? Is this a wick or is that me? It's me, okay. But now triggered into this trade. Now triggered into this trade. I haven't got break even yet. Okay, now we're shitting ourselves a bit. Okay, finally got break even. We can now relax. Let's see what happens. That was close. Anyway, so now, what I should have done is back here, taking a print screen of this, okay? This behavior. What I want you guys to focus on, okay, is not this stuff here. This means nothing. This will come once you guys start to apply yourselves. Promise. I promise, I promise, I promise. If you guys start to apply yourself properly, this will come. Your wins will come. Start to study and understand the behavior and why you're entering. Go and categorize it in Word, PowerPoint, whatever you want. Write it down. I like to see a breakout of structure. I like to see a break back in. Let me do this visually. I like to see price make a lower high and then come back for a double top. These are the structures I can visualize. These are the structures I can work with. I like to see bullish candles. I like to see wicks. I like to see bearish candles. I like sell stops. I like sell limits. I like bigger stop losses. I like smaller stop losses. Listen, it's all part of the same shit that we're learning. There's just different variables for different personalities and different characteristics. Go and take some time to work it out. Be honest with yourself and figure out what is working and not working for you. Okay? It is very, very important. So 3 trades, I believe, 2 break even, 1 loss, don't know, 1 win, whatever, don't care. Thought process, thought process, thought process. Pattern recognition, pattern recognition, pattern recognition. Notice, whatever I analyzed on the 4-hour time frame to be structure high, lower, high, doesn't matter if I went to my 1 hour, well, it was only the 1 hour. I did not change my bias at this point. I did not care about no structural lows, No mini features here, no riffraff here, no support here, none of this lot. I just focused on what was happening where I wanted to enter my trade. I focused on getting a safe stop loss, how I was going to get in, how I was going to manage it. And that is, I should say, simple as it is. Okay? Do we have any questions on this? Come forward and ask me, please. No questions? Well, I'm happy. That was
Is the cheese man only identified on the on any time frame? Can it be identified on any time frame?
So the cheese man is structure. I don't know how to do this in the buy, but I know how to do it in the buy. If I flip the charts, is a push, a lower high formation, a push down, a lower high, but fails to break, pulls back for a double top, and then finally breaks. Okay? No, understand this. It fails to break, or it pushes down, makes a lower high, pushes down, pushes up, breaks, and then comes back for a double top and continues down. Does this. Pushes down to make a higher low. Higher low, then comes back to make a double top and then goes down. Okay? So notice these two structures. Fails to break, comes back for a double top, or makes a higher low within a downward moving structure and makes a double top and then goes down. Does this make sense?
Yes.
Correct. The first eye is the evidence and the second eye is the confirmation.
Not just in a cheese man, everything.
In everything, yeah.
Correct.
Okay.
Now, I don't want anybody to get disheartened, okay? I know sometimes when I explain things, I ramble on, but this is just how I process my thoughts. I was never like this in the beginning. I got there. But, I mean, I should do a session, to be honest with you, and ask you lot to go through one candle at the time. Behavior.
Well, can I say something here?
What's wrong?
Like, I want to say something like you said when we analyzed like the cheese man, right? Double top and double bottoms. Like, I was taking some trades on demo, but how do you like recognize the false breakouts?
Well, I mean, what does this look like? It's not, we don't use terminology like false breakout. If you notice, I don't really say false breakout. I say break out, break back in. I know it's the same shit basically, but it's not to me because I'm not looking for a false breakout. I'm just looking for behavior. So if price breaks out of this structure, this is indicating what pressure in the market?
It's a bull pressure.
If price breaks back into structure based on the sentiment of the market down and lower highs being formed, this is indicating what pressure?
A bear pressure.
There's one word before bear pressure.
A bull pressure.
No. So bull pressure.
Yeah. All right. I was
continued bear pressure.
Okay.
I know it seems silly, but this is just behavior of the markets. And for those that have been here for a while, you'll hear me say this all the time. I want to break out of structure, a break back into structure, and then I want a what? A retest of structure before it goes down. Okay? Look at the behavior. Now, this doesn't look like a breakout, but if we go down to the 30-minute time frame, okay, maybe not the 30-minute then, and maybe not on the 15-minute. It closed very quick, pushed up and closed down below. Just visualize it though, okay? If you see this, what you're seeing is price attempts to break out, broke back into structure, and now we have a retest of structure. So this is something I highlight all the time. Breakout, indicating bullish pressure. Break back in, indicating continued bearish pressure. Retest, sell stop, stop loss, target. And these trades are super powerful when used with double tops and lower high, Yeah, no, mainly double tops and double bottoms. Okay? Because what you have to now understand is the psychological behavior of the market. If we have the market that is pushing up, we finally have a violation of this structure after a long time of it violating the structure. This here is indicating bullish pressure. This now is indicating bearish pressure. If this is our structural high, we still have bullish pressure in the market because the buyers still want to continue buying. What happens? Retail traders enter here and here late into these buys. So we have this continued buy pressure. But we know based on all the back testing that we've done is that once we get this violation, more often than not, we are just waiting for this to happen. So once we see this happening, what we can expect to happen is a break enticing breakout traders, a potential retest enticing retest traders, and then the market pushing back down to take out stop losses and then coming back for a retest and going down. Does this make sense, or was that too difficult to understand?
No, it does make sense, but I'm generally like, I'm basically saying that you can analyze those false breakouts with lower time frames.
Yeah, but I would not start going that. Notice that with my 4 hour time frame, I use the 1 hour time frame, okay?
Yes.
But I focused on the 4H only. When you start going down to the 30-minute time frame, there is a lot more noise that you're going to be looking at. Again, this is personal to you. There is no right or wrong answer. If you understand market structure, so just as an example, okay, if now on the hourly time frame, I'm entering based on a wick, I know if I go down to the 30-minute time frame, I'm going to be entering on a candle close. If I enter on the 30-minute, I know that on the 15-minute, I'm going to be entering much higher aggressively. So if you understand the time frame behaviors, then you can use the lower time frames, but entries on the time frames are going to change. 15-minute, you can always get tighter with a smaller stop loss. 30-minute, you may be entering with a candle close. 1 hour, you may be needing to enter in a bit more aggressively with a sell stop. And with the 4 hour, you may be needing to enter in, as you can see here, with a sell limit. Because this time frame gives you no evidence why you're entering. This one gives you evidence why you're entering. This one gives you even more reason why you're entering. And then the 15-minute gives you even more reason why you're entering, but at the same time, going in a little bit more aggressively and trusting your analysis. Does this make sense?
It does. Thank you, sir.
Okay, so just please go with what you feel comfortable with and you understand. This will come with experience. But if you exercise this exercise, if you practice this exercise, I can promise you it's going to make a world of difference. Play with it, enjoy it. 4 hour, and it only doesn't take you 40 minutes like it's done me now. I probably tried to make it look more special than it was. But the truth is, I could do 3, 4, 5, 6 trades in 5, 6 minutes because I know what I'm looking for. It may take you a little bit longer, but just trust the analysis, okay? Look at the 4 hour, get the sentiment of the market, scale down, understand. Is this an entry? No, this is beautiful indecision because we're at a major level. This is perfect. Would I have entered here? Well, if you did, you can say, yeah, cool, but I just need a bigger target. So for that reason, I may have not entered here. Could I have entered once price come into this region and sell stop? Absolutely. Blah, 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 blah. Build a story, apply the story, see if it works. If it doesn't, and it continues to be confusing and doesn't make sense, then you know you're going wrong somewhere. But the more you do this, the better you're going to get. And then what you're going to realize is when you come to the live markets, let's see what's happening over here. When you come to the live markets, you'll be able to say to yourself, well, you know what? I recognize this pattern. Yep, it was a consolidation.
Breakthrough, retest, and
breakthrough, retest. Now, guess why Rock said he doesn't sell this structure here? Because I don't sell retests of consolidations. That's just the trader I am. I don't take them. If this pumps down 1,000 pips, I don't give a crap. I just don't take those trades. So I move on. Whereas Scott, he will take trades like this all day long. Z will take trades like this all day long. Me, I might be looking for more of a momentum trade. Everything is being taught here every single day. Figure out what works for you, but don't focus on everything. Focus on one or two things. And this is what I'm saying. One thing, the easiest is just to work with the patterns you've got. Once you've mastered them, move on. The quicker you can do that, I promise you, you guys could probably learn this strategy within well, obviously different circumstances and that, but probably could learn this strategy course 2 to 3 days. I don't see why 5 hours is a big deal anyway. I know I'm taking into consideration people's circumstances, so I'm not undermining that. 2-3 days. Next, break and retest. Watch them, understand them, okay? You only need one of them, really, and try to understand the different elements. Move on to the new content, understand 1 or 2 things. Within a week, you could have studied enough content in the drive to then move on to the community itself and just take advantage of the channels and me. And that's it. And as I said, you guys just need to execute 100 trades. People say, well, what's the rule, 10,000? Bollocks to that. If you guys are focused on pattern recognition and understanding the simplicity of market structure, you can master this within no time. Then you move on to mastering yourself, because that's where the problem lies with traders, not the strategy themselves. So
It's all based being disciplined.
I wouldn't use the word discipline, because discipline, you need other things with it. I'm just saying, you just need to apply yourself, okay? Apply. Look, you can read a book once. You can read it a second time and get more information than you did the first. Read it a third time and get more information. And this is why I say, in trading, you just have to rinse, repeat, because you're going to continue learning every single time. And this is why this exercise is so powerful, because if you wanted to, and you say to yourself, well, I'm a consolidation trader, and then this is what you do. Consolidation, you be realistic, you draw it like this, or however you see it fit. You say, would I have taken a retest here because I'm a 15-minute trader? Well, let's take a look at this. I'm a consolidation trader, and I like to take aggressive retests on trades. So I'm going to do this, I'm going to do this, and this is where I would have entered the trade because I'm aggressive. Would I have got an entry? Well, let's see how this pattern would work out in the real world. 15-minute time frame, because I'm just about that life. This is how you guys are talking to yourselves. This is a 4-hour time frame, so we've got to go back, baby. Zoom in. I'm here. And now you start to build your story. Consolidation. You have to be honest with yourself now. This was the break. This was the retest of structure. Are you satisfied taking this trade with this candle here? If you are, you take it. You go and take another 10 of them and see how it works out. If you're not, then what you do is you say, now this becomes evidence. Price now pulls away, comes back, I have the rejection. Now the truth is, would you have really sold this candle? Probably not. So you wait for more clean structure. We finally have the break of this structure here in the market where price failed to break for a very long period of time. Remember, just bearing in mind, this is a consolidation of the 4-hour, and say, well, once price broke this and came back, I have the rejection here, I have more rejection here, then maybe, how about I tried it this way? Didn't get the rejection here after the evidence confirmation, but I got the final break of the structure. How about I enter this trade once price breaks here? I know it's a very small stop loss, but this is a risk that I'm taking with these kind of structures. So let's backtest it now. I'm now only entering this trade once price breaks the low of the structure. If it's continued bullish pressure, it's going to go up. If not, it's going to go down. This stop loss is too small, so I can't work with that. I can work with this. Right, nice space above. Let's see what happens. Okay, beautiful. Now, I know this is a very aggressive trade, so what I need to be doing in a situation like this is making sure I get break even as soon as possible. So we're looking at this trade now about 7 pips. We have a strong push to the downside. We do have a break at the structure, which is indicating bearish pressure. We're studying behavior here now, nothing else. We do have a rejection wick, not scared of it because we have the break below. So let's continue and try to get break even as soon as possible. Fine, I feel satisfied because I see that the bullish pressure attempted to push back into the market failed. This gives me a lot of confidence, but I don't care. I don't need the confidence. I've taken the trade. So now I'll go break even. It's either I'm going to win this trade or I'm going to go break even. This does not scare me because I'm break even. And there you go. Bob's your uncle. This trade was back tested based on a break of consolidation, an aggressive entry that you did not get an entry on, even with the double top. But you finally got the break of structure that you needed to see and a retest of that structure, and then around here. Now, on the 4-hour time frame, look here. You do not have evidence of that retest. But when you go down to your lower time frames, you start to study behavior of the market, and you start to see here the retest. Okay? So bear this in mind.
Makes a lot of sense. Makes a lot of sense.
Good. So, as I said, this is 4-hour, 1 hour. Tomorrow, I'll do 4-hour, 1 hour, 30 minutes, which you're obviously going to get much more entries. But at the same time, you're going to have to understand what you're doing. Then I'm going to move on to do 4-hour and 15-minute. And then finally, I'm going to go on to what I've been practicing very briefly, which is 1 hour, 5-minute. If I start with too many questions, I won't do it because I don't want to confuse you. But for now, watch this over once, or if you got it, go and practice it. If it doesn't make sense and you're losing, it means you need to stop what you're doing and adjust and tweak. It will come to you. But what you guys do is you take 2-3 trades, get disheartened, take 10 trades, get disheartened. Go and set out to take 100 trades. Again, I've got the statistics of who's watched the 100 trade challenge, and hardly any of you have watched it. All right, speaks volumes. So guys, listen, and ladies, let's apply.
I literally watched Rocks every single minute of it, and I didn't even move a single inch.
You may have watched it, but the majority haven't. And this is what I'm saying. Everybody has unanswered questions as to why they can't take this trade, that trade, this trade, that trade. Think about just applying yourself just a tiny bit more. The question is, you think you're doing enough, but can you be doing more? And that applies to everything we do in our lives. Relationships, work, health, whatever it is. You think you're doing enough, but the question is, could you be doing more? So think about that. Great session, I think, even though I spoke a lot. And let's make it happen, okay? I'll catch you on the side, guys. Take care.
I appreciate it, Rocks.
Take care.
Thank you.
Bye-bye.
Thank you.